Everybody's talking about interest rates. That's probably what's in the media the most. But there is a dark horse, let's say, that's affecting real estate ownership and specifically multifamily ownership. And that, guys, is insurance. Welcome to the Cash Flow Digest. My name is Matt Faircloth, and I'm super excited that you guys are here today. Whether you guys are watching live on our DeRosa Insiders page, which you can get to by going to Facebook and go to DeRosa Insiders. That is a free community. You guys can watch this program live and join all other real estate conversations that are happening in that online community. You can do that, of course. And you can also watch this program on Spotify. This is broadcast every week on Spotify. The full broadcast is there with video as well. So check that out too. And if you guys are watching on YouTube or any other means on other online portals, thank you. And welcome to the Cash Flow Digest. We've got yet another great show coming for you today. Everybody's talking about interest rates. That's probably what's in the media the most. But there is a dark horse, let's say, that's affecting real estate ownership and specifically multifamily ownership. And that, guys, is insurance. Insurance has gone up this year 33%. The year's not even over yet. 33%. We've seen policies double. We've seen rates. When we were looking at an apartment complex, go from, they were paying $400 a unit. The bid that we got from our carrier was $1,200 a unit. For the same apartment complex that the current owner is paying $400 on, we were bid at $1,200. So rates are absolutely skyrocketing, guys. And why is that? Right? Let's talk about that for a second. Aside from just good old fashioned greed and good old fashioned companies agreeing to raise their prices all at once, and that's probably part of it. Insurance premiums are broken down into two factors. So there's way more to it, but I'll give it to you in bite-sized chunks here. The insurance premium that you pay for a property is a factor based on two things, and that is the replacement. And by the way, I'm not talking about general liability insurance. I'm not talking about slip and fall stuff. I'm talking about some people call it fire insurance or building insurance, aka the insurance policy you're going to leverage if a major storm comes through, if there's a fire at the property, if there's major property damage that's not due to your own negligence or whatever it may be. There's two factors that affect it. Number one, the building replacement cost. Building replacement cost used to be somewhere around the 80, 90, even $100 a square foot type of price point. I wish that some of my apartment buildings I could buy for that price point, or I could build a new one for that price point. But that's been the market factor. They look at the square footage and they say, okay, well, we're going to give a building value of X amount of dollars per square foot. It's not property value. It's what the insurance company's calling replacement cost. Meaning if the building were to burn to the ground and all you have is the ground left because you still got the ground, and you wanted to build a new apartment building, that is technically what they would insure you for. Now, I know there's a lot of other factors in there, and that's not exactly how that it goes, but that is one factor. Look at your insurance policy. It'll tell you what the replacement cost of the building is. And the second factor is a rate. Okay, they multiply that replacement cost by a rate, like a multiplier rate. That tells them what the effective premium you're going to pay is. Cost of building, and they're going to blame it all on inflation and lumber cost and material costs and labor costs and that kind of thing. The cost of materials and labor really have gone up. And so insurance companies are increasing their replacement costs for buildings. We've had replacement costs go from 80 to $90 a square foot up to 120 or more per square foot. So that is the one factor you can look at on your insurance policies right now. If you're experiencing a major hike on insurance, ask your insurance carrier what they're insuring the building replacement cost as. Maybe you can argue with them on that one. Maybe you can't, but that is likely going to be a major increase you're going to see. And the second thing is the rate factor. With you multiply that replacement cost by to come up with what your annual premium is going to be, right? Rate was somewhere in the neighborhood back in the day of around 20 cents on the dollar. The rates have doubled, right? So that's like in the fine print of your policy, you'll see what the rate factor they're using is, and they've gone from 20 cents up to 40 cents. And so those are the two things that affect your insurance. And the reasoning for that is, well, there's more storms. Well, a lot of people are making claims. Well, that's probably where profitability lives right there. Let's just be straight. Multifamily's gone way up in value and in the last couple of years. And so this is capitalism 101. They're seeing the increase in profitability on these properties. And so they're seeing, well, we probably ought to catch up with the market here, right? So that's maybe where that shows up. So these are two factors you can take back to your insurance carrier and perhaps present a reasonable discussion as to why you might want to get a reconsideration. The article that I'm basing a lot of this conversation on, this is an article that came out on Globe Street and Marcus and Millichap did a analysis on this. You guys can get a copy of that Marcus and Millichap report. And next thing that's happening is insurance companies are doing full exits from markets. And when I say a market, I don't mean like a city like Orlando. I mean a state like Florida. They're looking at and saying, okay, we are no longer going to insure in large states. We've had properties that have aluminum wiring. Insurance companies have come out and say, well, we're no longer going to insure for those things. So insurance companies are getting drastically more conservative as the market's changed and that, and maybe trying to avoid claims that are coming down the pipe and things like that. So insurance is a changing thing. It's in some ways it is what it is with regards to insurance, right? But there are ways that you can at least negotiate or try and mitigate a few tips here that'll give you guys on how to mitigate your insurance costs. Take a look at what your deductible is, meaning when you have to kick in. There's no reason why a multifamily apartment building should have a deductible that you would on a smaller multifamily property, like $1,000, even $5,000 is probably too low. So if you increase that deductible on the amount of money you have to pay out of pocket first before the claim kicks in, right, then that is something that that you could consider. The second thing that you consider to lower your premium cost would be to consider alternatives. If you've got a reasonable sized portfolio, consider doing a blanket policy across multiple properties, or you can even put your real big fancy pants on and do things like captive insurance or other insurance offerings that may be out there, right, guys? So those are some tips, guys. And I think there'll be more changes that'll happen in the insurance world. My personal opinion, this is just what Matt thinks, put an asterisk on that, is I think that the rising insurance cost is going to actually create an opportunity for more competition to step into the insurance space. So you're going to see people that are not in the insurance world right now get involved in insurance. Currently, I've seen property management companies get involved in insurance because the costs have gone up so much. They're looking at this saying, well, we manage dozens and dozens, if not hundreds of apartment buildings across the country. These larger property management companies do. And they've said, well, why don't we get involved in the insurance business? Why don't we provide a product for our own portfolio and for our clients' portfolios? So you're going to see more of folks that were not in the insurance business get involved in it. What if your bank provided a insurance option? You go to a mid-sized bank. What if they were able to blend in insurance into your monthly payment with your interest? I just made that up. Maybe that's something that happens. Maybe it doesn't. But there's other vendors that are in the multifamily world that may decide to get into the insurance space as well. We will be chatting more on this with our guest that joins me on this program live. So if you guys want to hear more on this, make sure you watch the Spotify download with Andrew Cushman on this program, or watch the YouTube video from that interview, or just take a minute and join the DeRosa Insiders community on Facebook. That's what I got for you guys on insurance, guys. I hope those are some good tips. Thank you guys for watching. We will see you next Friday live at noon Eastern, when we go live every week. Talk to you then, guys. Hey guys, Matt Faircloth here. Thank you for listening again to the Cash Flow Digest. I really appreciate you guys doing that. If you guys want to hear more about what DeRosa Group has to offer, go to DeRosa Group, DeRosa Group.com, DeRosaGroup.com online. You can hear about all the great things that we offer from an educational standpoint and passive investment standpoint on our website. See you there. And if you guys want to join our online community, DeRosa Insiders on Facebook, where you can watch this program get recorded every Friday at noon Eastern, and you can come on as even a guest or ask questions on the show. We hope to see you guys on our online community, DeRosa Insiders. See you there.